Would you insure a $10 million asset without hesitation, right? Yet so many successful business owners and professionals who expect to earn 10 million, 15 million, or even 20 million over their careers fail to protect that income potential. Whether you're a surgeon, a dentist, a lawyer, or an entrepreneur, your ability to generate income is likely your most valuable asset, but it's also the most vulnerable. My name is Omar Morillo. I am the founder of Imperio Wealth Advisors, and I am a certified financial planner. In this video, I'm going to break down the different types of life insurance and disability income protection strategies that could help protect your family and your lifestyle if the unexpected happens. I'll cover some of the key differences between term, whole life, index universal life, and variable universal life insurance policies, and explain when each might make sense for your particular situation. Then we're going to dive into disability income protection, exploring the critical distinction between own occupation and any occupation coverage, a difference that could be worth hundreds of thousands of dollars to high-income specialists. This video is about you making informed decisions to help protect what you've worked for. So let's dive in. Life insurance fundamentals. Why life insurance matters for high-income professionals. First of all, it's an income replacement vehicle for your family. It also can serve as a business continuity source of funding, as providing also liquidity for your estate in the event that you have an estate tax problem. And it can be a strategic wealth transfer vehicle for the next or future generations. It can also serve as a debt elimination tool. Think mortgages or business loans, right? So now, what are some considerations to take when you are determining what type of coverage to have? There's different analytical approaches to evaluate your needs. Some advisors are going to suggest multiples of annual income as a starting consideration. It's also important that you consider your potential future circumstances and also account for financial resources and obligations that make your situation unique. Consider also the factors that affect your business continuity whenever they're applicable. So let's talk about what different types of life insurance there are. Easy one is term life insurance, pure protection, no cash value component. This is typically the most affordable option initially. The coverage is for a specific period, typically ranging from 10 to 30 years, and is generally ideal for young families with a tight budget or specific temporary needs, such as mortgage protection or children's education. And term insurance can often be a supplement to your permanent coverage. Now let's talk about whole life. Whole life is permanent coverage with a guaranteed death benefit. The premiums are fixed and they don't increase. This type of policy does accumulate cash value at a guaranteed rate, and there is potential for dividends being earned in the policy, but those are not guaranteed. This type of policy is generally ideal for conservative individuals that are seeking guarantees to provide for estate planning needs, business succession funding, or long-term care hybrid strategies. The next type of coverage is Index Universal Life, or IUL. This also is permanent coverage, but with flexible premiums. The cash value isn't guaranteed, but rather is tied to market index performance without direct investment. These policies, while offering the potential for higher tax-deferred returns, also carry some risks, including the possibility of lower returns if the index underperforms or if fees and costs erode the cash value. These policies typically offer downside protection with upside potential that comes with limitations or caps on the growth potential. These type of contracts are generally ideal for those seeking growth potential with reduced risk or those who are looking to supplement their retirement income. Beyond that, it's also ideal for those who are looking for estate planning with flexibility. The next and final type of life insurance contract is the variable universal life contract. This offers permanent coverage with flexible premiums, but the cash value is invested in market-based sub-accounts. This type of contract offers the highest growth potential, but also exposes you to the highest risk. So a key consideration must be that investing involves rewards, but also risks, and that may have the potential to reduce the policy's cash value. There's typically no downside protection with generally higher fees and expenses. This type of coverage is ideal for sophisticated investors who are comfortable with market risks and those who are seeking the maximum tax advantage growth potential and those who are also looking for long-term supplemental retirement planning. So Hypothetical case study. A business owner with significant income might consider a layered approach, such as having term coverage for family protection needs and permanent coverage for long-term planning consideration. The result could be that they'll end up with a potential comprehensive plan of protection with cost considerations. Now let's dive into disability income protection. The risk for disability, first and foremost, is something we must address because there are studies that suggest that professionals may face disability risk during their career. And based on industry data, disabilities could last many months or even years. For specialists, certain impairments could potentially impact their career performance. So it is important to consider protection against this potential risk. Now, what are the key policy features to understand? You must understand when you're buying a disability policy, its elimination period or waiting period, meaning how long you must wait from the moment that you are declared disabled to the moment that you can begin receiving benefits. What is the benefit period? Meaning how long the benefits are paid for. The benefit amount. Typically, the target is 60 to 65% of income. Whether the policy is cancelable or guarantee renewable is also a key consideration. And also, what are your options if you want to increase your coverage in the future? What cost of living adjustments are offered in the contract? Beyond that, the differences between own occupation versus any occupation. There's a critical distinction. Own occupation coverage provides benefits if you cannot perform your specific specialty. So for example, a surgeon with a condition may still be able to work in a different medical role while potentially continuing to receive benefits. Now, the premium could be higher because of this level of specialization, but this may be worth considering for those who are medical specialists, dentists, especially oral surgeons, attorneys with specialized practices, or other professionals with specialized skills. Now, the next type of coverage is any occupation coverage, and this provides benefits or may provide benefits if you cannot work in any suitable occupation. This could offer different levels of protection for different professional needs. So, for example, a professional who can no longer perform one role might have benefits affected if they can perform others. This also may have different premium considerations, but it could be very important to evaluate this for professionals with varied skills, or those with multiple income streams, or those with different income protection needs. So for example, a dental professional with a significant practice income might consider specialized coverage features such as an appropriate elimination period, a benefit period aligned with their career time frame, and a monthly benefit structure to help maintain their lifestyle. This could result in potential income protection even if specialty work becomes challenging, but they can engage in another paid profession such as teaching. Now, let's talk about implementation. It is very important that you coordinate your coverage, whether it's life or disability, with your overall financial plan. Insurance can be placed as the foundation of financial security, but there must be a balance that gets struck between protecting your wealth and accumulating your wealth. And of course, the tax considerations for different structures cannot be understated. Overall, these approaches and strategies must also be integrated with your overall retirement plan. Now, here are some key mistakes to avoid. Underinsuring yourself based on current lifestyle only, because as your lifestyle continues to grow, the coverage must adjust to meet the needs of the lifestyle. Focusing solely on premium cost and not contract quality. Make sure that you have a quality contract, not just only look at the cheapest. Ignoring inflation's impact on future needs. Having the ability to adjust for inflation would also be a very good idea. Failing to review your coverage as your circumstances change, and also neglecting business continuation planning. Now, what does implementation look like? First, you want to start with a thorough protection analysis, all right? Secure coverage for the needs that are immediate first and build a comprehensive protection plan over time. Now, conduct regular reviews as income and assets continue to grow. So there you have it, a strategic approach to life insurance and disability income protection for high-income professionals. Remember that the right protection strategy isn't about fear. It's about freedom. Freedom to take calculated risks in your career and your business and focus on growth without constant worry, and freedom for your family to maintain their lifestyle no matter what happens. The specific approach that's right for you is going to depend on your situation, your income level, your specialty, family circumstances, and your long-term goals. There is no one-size-fits-all solution. So working with experienced professionals is very important. In my experience, the most successful successful protection strategy evolves with you over time. What's appropriate for a young physician or a business executive just starting out their career will look very different from what's needed by an established practice owner with significant assets. At Imperial Wealth Advisors, we specialize in helping entrepreneurs, medical professionals, and dental specialists implement protection strategies that align with their overall wealth management plan. So, if you're a high-income professional and you're looking to optimize your protection strategy, click the first link in the description to schedule a protection analysis with my team and I. And for actual wealth planning from an actual certified financial planning professional, subscribe for more content like this.